For that, let's turn our attention now to the IT space. For Infosys, a global customer has terminated a $1.5 billion MOU with the company. Sandip Agarwal, fund manager at Sowilo Investment Managers, is with us on the show now. Sandip, morning. How do you read this development? Firstly, it's quite uncommon when IT companies announce an MOU or an LOI. They typically announce when the deal is done. You've signed on the dotted line. But in the case of Infosys, we had them announce this MOU, and a large MOU in the month of September, and now that's been terminated. How would you read the developments? And no reason has been given for the termination.
Yeah, so, there are 2-3 ways to look at this termination of the contract or the MOU. Basically, one is that, it can be seen as a simple MOU which has been cancelled for, variety of reasons, which could be, non-compatibility with the client requirement or the structure of the deal getting changed or the requirements of the deal getting changed or some other reason. But if this would have been a standalone thing and other things being good from all fronts, then probably, the reaction should have been limited in my view, because, finally 1.5 billion was spread over more than 10 years. So the annual impact is very minuscule, maybe 1%. And because it was big, it is known, but companies sign every day several number of deals, and there should not be a big impact on the numbers. But with the kind of, attrition we have seen in the top management in the company, whether it is chief delivery officer, chief financial officer, president sales, along with this cancellation, yes, I think, there is more to more than what we are seeing on the front. So there is a possibility that, one of the management exit which has happened, they have joined some place and they have been able to, offer a better deal or something. If that sort of thing is there, then there is really something which needs to be worried. But otherwise, I think this deal termination, yes, it is negative, but I don't think that, it should be having a very big impact on the financials otherwise. But when you club with these exits and with the past, cut in guidance, it looks little, worrisome. That's the way I will put.
No, Sandip, morning. I got your point. I don't think it's really about the immediate EPS impact for, the next 25 or even 26. But in terms of just, would you read anything further into it in terms of why they could not go ahead with the MOU? What could be the issue? Is it execution bandwidth? Would you read anything further into what this could imply for other such big AI deals for Infi?
No, so the way I have seen in last 21 years, I would say that, generally it is the scope of the deal which gets changed. And most of the time it is at the client end where things change substantially. And because of that, this kind of cancellation or termination happens. Client may increase the scope substantially without agreeing for, additional budget for it. Or maybe, the program itself would have got cancelled at the client end. Or maybe they would have broken down this deal into several smaller deals which they want to pursue given the economic environment or the worries on that front. So it could be any of those reasons. I have generally not seen that, cancellations are happening because of the problem at the vendor end. And I don't think it is the case currently also. It must be something which has changed in terms of scope or pricing or some kind of, change at the client end. And because of that, this has been called off. As you rightly mentioned, there will be not much any impact on the EPS of either 25 or 26. But sentimentally, a very big deal which gets terminated obviously brings some kind of, negativity around the environment.
Just to that point about the possibility of the recent management's exits having a role to play in this MOU getting terminated. Now, this MOU was announced only in September. After that, we've only had the CFO step down, announce his resignation, Nilanjan Roy. But CFOs are not much into business, into, the technical operations and the deal execution. The big two, the precedent resignations happened well before this MOU was announced. So, throw some more light on why you think the recent management, senior level exits may have had a role to play in this.
No, so I am not calling out that there may be role because of that, but I'm saying if you club the senior management exit along with this deal cancellation, it brings some, worries on the company that, there has been senior level exits, there had been deal cancellation. So everything coming together, it is not always 1 + 1 + 1 like that. So my worry is that, a lot of negative news is coming on a particular company. That is my worry. I will not say that, the senior management which has gone, they would have resulted in this termination and all that, because we don't have any such information. We don't have any data to substantiate that. But I will say that, both the things combined together, the past guidance, muted guidance, the cuts, and senior level exits, and now, this deal cancellation. All together, it looks like, there is something which we need to be cautious on. That's it.
Sandip, hi, morning. Just a few days back when we spoke, I asked you about Wipro, and again, the flurry of excitement about a potential a management change right at the top, which of course turned out to be not so. How would you read what happened on Friday, and of course, the road ahead for Wipro from here?
So, we don't know, but, if let me put it this way, that we have seen series of changes even in Wipro at the top management, and fortunately, unfortunately, not great changes have happened in the financials of the company. They have continued to underperform the large caps. So I would say that, if a very successful leader comes and joins, there will be a positive environment around it. But remember that it always takes time to turn around such big companies. And also, in my experience in last 20 years, I have seen that when a leader comes from a large company to a mid company or small company, the impact is much bigger, much substantial, and that is really a place where you should look at. A leader coming from a similar size company or from a smaller size company to a large company, we have not seen great turnaround in the past. So I will reserve my comments on that. But in my view, leadership, this business is a B2B business. So a good leader, a strong leader coming in with a 10, 12 people, strong team of followers, I think, wonders can happen. We have seen that in Mindtree, we have seen that in Persistent, we have seen that in LTI, we have seen that in Coforge, we have seen across 7, 8 companies. But remember, every time a leader has come from a bigger size company to a smaller or mid-size company. If that is the case, from a leader comes from a very big size company and there is a change at the top management, then there could be substantial re-rating or something which can happen. But as of now, because of lack of data, I would say that Wipro is a value buy in the large cap space. So from that perspective, the downside should be limited.
By the way, pre-open rates are in, and we're getting a very mild 15-point sort of a bounce in the Nifty, with IT being the weak link, actually. That's the one sector that seems to be, at least right now, seems to be a bit of a drag. Wipro, Infosys, TCS, all these stocks have a little bit of a red on them in the pre-open session. So, Sandip, as we're winding up, and I don't know, maybe we don't get to talk to you again in 2023. So as we're heading into the new year, a lot of the issues that we've just discussed on large cap IT, if you were to buy one large cap IT stock, which one would it be and why? And then leave us with one top mid cap IT pick as well for the new year.
So, we run a PMS, so difficult to call out stock, but I will say that I will stay with value picks in the large cap space and even in the mid cap space, because right now is not the time to chase growth, because, if you try to chase growth, the stocks will be very expensive. The environment is such that you should chase value picks. So I think in the large cap, Tech Mahindra, HCL are value picks. Even Wipro is a value pick to some extent. And in the mid cap, there are very less value picks, so very difficult to call out. But yes, some names like Birlasoft, Gensar, FirstSource, they are still available at reasonable valuation, I would say. So without specifying any name, I think, you should chase value rather than growth.
Gensar, if you remember, we were talking about it on Friday, right? I think the stock has gone up 3 times since their management change. So, good chat as always, Sandip. Great speaking with you, and pleasure having you here on CNBC-TV18. Thanks very much for that. Let's just take